guys, DoorDash here, coming to you today with a very, very important video. I want to talk to you about something that I think every uh, delivery driver out there works for DoorDash, any of the apps, I think will find this very interesting. And I want to share with you something that I've seen because I keep a tremendous amount of statistical data. Okay, I'll show you. I mean, this is my spreadsheets that I use. That's just one of them, and that's my 20. I have kept earnings data on 2021 from April of 2021 through uh, the current year, 2022, 2023. I have everything tracked from my total income to my total deliveries made to my uh, what I call work rate, time on delivery, overall time on delivery, average time on delivery when I'm performing orders. I mean, I have it all, and I have my spreadsheets that can break it down. I've made it clear that I will make that available to anyone out there who wants to use it, use these sheets to collect their own data, because I'd love to have someone else collecting that data to compare it with in other markets, and I will. My only ask is number one, you don't profit off of it. Number two, I'm not going to profit off of it. Number three, you subscribe to my channel so we stay connected. And anybody you hand those sheets to, you ask them to subscribe to the channel, your channel too, if you have one, and we collaborate together, share information with each other. That's the only ask I have. And any questions you have, you can come my way. But anyways, let's get into the video. Let's get into what I want to talk about today. So, what I want to talk about today is this. Number one, we all know that it seems very, very slow out here in the markets. And what I want to talk about is I want to talk about why I think that isn't necessarily all that's going on out here. A lot of people are saying it's saturation. A lot of people are saying, well, there's too many dashers, and I'm going to explain to you why I don't think that's the complete answer, and that I think things aren't as slow as we like, but I think DoorDash is getting their way. And there's a couple things I can use to prove this to you if you stick with me through this video to the end. So the first thing I want to talk to you about is the concept of time on order, okay? And why this is a data point that is very important for you to consider. And I'm going to tell you about this data point and what I've learned in reviewing my information and what you need to do with the information I'm going to give you and why this makes an impact and how I've been working and the impact it's made. And I'm not going to say I haven't been affected. And at times you're going to see in my numbers that yes, I've given in at times. I've tried to work differently. I've taken lower orders. I've fallen off of I've gone off of what my normal strategy is, and it's been in my own peril, not to my own gain, and I have the numbers to prove it. So what I'm talking about here when I say average time on order, like overall time on order, is this. Is when I'm out, and I track my time out, begins when I take my first order and when I end my last order, and anything that happens before those two things, I don't track that. That's how I begin my process, because I don't consider myself clocking in or anything like that. I'm tracking it just to see that overall body of time. If I stop for a significant amount of time, I'll start the tracker again when I take my next order. Normally that time frame is if I have a half hour or more of time that I'm not taking orders, I'll stop tracking that as downtime and I'll move in. So, I kind of use discretion on it depending on what's going on. If I'm actively tracking orders and I just have an hour of downtime, I'm going to count that because I want to see it, and I want to see it bear out in the numbers. Now, the thing about data is as long as you do it consistent and you do it one way, you can make conclusions and draw conclusions, and you can derive information off of the data, but it's got to be consistent, and that's the key when you're collecting data. And in this case, consistently do it the same way, and you can draw conclusions from it, which I have done. So my time on order, I'm going to go through my time on order in 2021. I started tracking that data marker in June of 2021, and from June through December, it was 34 minutes, 34.12 minutes on order, meaning I was taking, for the overall timeout, I was spending 34 minutes, if you take the total orders that I did for the day and you divide it by the amount of minutes I was working in total, which is reflected from the first order to the last order, that reflected out as 34.12 minutes. And I track that number because that tells me how busy it is in my market. My goal is to drive that number down to 20 minutes. And that would mean I would have been working 3 orders per hour that I was out. As you're going to find out as I go through these numbers, I have been able to do that. In fact, 2022, my number was 34.96 minutes on order. In 2023 year to date, it's 34.05. Now, that number also can tell you a lot about what's going on in your market, because in the event that you have a true slowdown, in other words, that the order flow has changed to the point that you're actually getting less orders, you're actually doing less orders, you should see that number rise, because you should see yourself being, maybe it's 40 minutes, 45 minutes, 50 minutes. So if there's a significant slowdown and your earnings are being affected because it's truly slow, you should see that number rise. If it's not slow, but maybe you're not getting as many offers, but you're still accepting an order and working an order for every 34 minutes, then that would be indicative that you would have a slowdown of offers, but it's not affecting your time on delivery. Now, one thing that absolutely will affect your earnings is your average order size. And in the event that this stays the same, your average order size is going to be the big indicator, and that is reflected and affected by the order value that you're taking orders at. And it's also going to be reflected in what you're willing to take, what maybe you're accepting lower orders. And again, the psychology of DoorDash is such, it has gone down from 2021. Now, 2021 to 2022, it pretty much was the same. It was 1323 was my average order accepted. 1322 was my average order accepted for 2022. And then we've had a drastic, almost $1 drop off to $12.27, which is, almost, that is almost a 7.5% drop off in order size. So when you look at that, that is indicative that something happened. So I started taking lower orders. And all that information is relevant because when you look back over the last year and you say, well, what happened? Well, I'll tell you, something did happen. And if you look at my average order size, the reduction, the order size, it was higher at the beginning of the year than it was at the end of 2022. I went back and crunched those numbers. Something happened in my market. The Diamond program happened. And the Diamond program began the process of encouraging Dashers and delivery drivers to take more orders and get their acceptance rate up, which I told you 7-8 months ago when this first came out and it was first being reported on, as these Diamond zones were popping up and people were encouraging more people to try to pursue Top Dasher, that the more orders that were accepted was going to affect the recycle rate on orders, and you were not going to see orders flowing through the market like you normally would, and it was going to slow things down. And it was going to also, because they weren't recycling, they were not going to be bid up as high. So those two factors are going to drive order size down. And as a result, they're going to affect earnings. And that is exactly what I believe we saw here. Number one, by affecting the recycle rate of the orders coming back through and having to be rebid and repriced and having them accept it quicker, that repricing process has stopped. And I'm going to tell you the proof of that in a second. It came out yesterday in DoorDash's earnings calls. Secondly, because Dashers began accepting higher percentages of orders, the amount of orders that are coming through that we are seeing through our phone looks less busy. It's not that we are less busy. Back when we were all cherry picking, if you remember, and you go back and you look at the videos, you'll see people talking about sitting in their car for 25, 30 minutes, decline, 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 and then finally they get the big order that they want, and they go deliver that order, and they come back and they decline some more. The perception of busyness was there. You're hitting that decline button, it feels busy. And then suddenly, maybe if you're multi-apping, you're getting some Ubers mixed in there, some Grubhub mixed in there, some Instacart. It feels really busy. Now, it didn't mean you were working more, because the definition of work is accepting an order, going out and delivering it. But it did mean you were declining more. It did mean you were engaged more with the app. Now, what DoorDash knows is psychologically, when you're engaged less with the app, it's going to give you the perception that you're not as busy. It's going to make you begin to think things are slow, and it's going to encourage you to begin accepting lower orders, because DoorDash is going to keep sending them to you, and they're going to send you orders at a lower price point. One, not because I don't think, this algorithm is not this evil thing, but the algorithm is starting at a lower price point because the orders aren't lasting as long. Plus, this. Well, if I don't accept this, I might not see an order for another 5 minutes or 10 minutes. All I'm seeing is low orders. And the reason why all you're seeing is low orders is because no order is staying in the system long enough to grow and mature and price at the market rate like it used to. They're all being accepted quickly and fast, just like DoorDash wants. And we said DoorDash would make more money doing this if this happened. And that is exactly what happened. Now, tying this all together, the proof of this would be in seeing someone like myself who has maintained, for the most part, cherry picking and waiting. And yes, I have said in my videos, it has felt slower. It has been slower. But I've also noted that I've earned more money this year, year to date, than I had last year, year to date. I also had reflected on the fact that I, felt that, um, you know, that I was noticing that my work rate was staying pretty steady, that my time on order was staying pretty steady. And when I went back and looked at the comparative nature of all of those figures, I saw that, yes, in fact, my work rate has stayed. And in fact, my work rate is at the lowest point not the work rate, time on delivery is at 34.05. In fact, it's lowest of all 3 years. The question here is what are we going to do here? Okay. What are we going to do about this? Because what I can tell you is that the overall order size is being driven down. People are taking smaller and smaller orders. They are not taking profitable orders with good order values. They are hurting everyone when you accept orders too soon. There should be as it lays out in the TOS, and if you need proof of it, go to the TOS, read your TOS, and DoorDash will tell you exactly what I'm telling you right now, that we are to negotiate with them. We are to create the market price for an order by declining and accepting based on our profitability standards for our businesses, okay? And that is what we are supposed to be doing. The quicker we accept an order, the more money we're losing on that order potentially, because we haven't given the market a chance. If you're the first recipient of that order, anyone who knows about negotiation knows that you're not getting the highest value out of that order if you're the first one to see it. And DoorDash has several mechanisms that they play with the algorithm with by sending it and hiding tip and things of that nature, so that they don't have to continue to increase their order for a while. In fact, all they have to do is just show a little bit more and a little bit more and a little bit more. So they start their negotiation with us at the lowest possible price point, especially on the big tipped orders, instead of showing it to us right out the gate and then having to continue to raise base pay and cut into their bottom line. It's why they hide the tips. It's why they've tried to, do what they did several years ago when they attempted to keep a portion of the tip to subsidize the orders they were having to raise base pay on. And the point of the matter is that it's our job as businesses, as drivers, as running our own delivery business, to demand value from these apps. We have to do that. Now, if you want proof of what DoorDash is gaining from this, yesterday there was an earnings call. There was a couple interesting things that were reported. If you look at the financial reports and you listen to the earnings call and you look at the data, right? And these data points are proving exactly what I have said, what I said 8 months ago, what I've been saying continuously. Number one, DoorDash reported record earnings over $2 billion, up 40% year over year. Second, order flow, orders fulfilled was up year over year. Okay. And it was up by nearly 100 million orders. That's going to tell you something. Okay. That tells you that it's not slower. DoorDash is getting more orders fulfilled than ever because we are hitting the accept button. We are allowing them to make money on our backs. And the third thing that they came out with is they said efficiency is through the roof. And their margins are better than ever. Efficiency, margins, that is language directly speaking to their cost of business, their cost of operating. And their cost of operating is us. And that is down. Their operational costs are down, meaning their margins are better. And not only that, but they were expecting, I believe it was 57-cent loss per share, and they reported a 41-cent loss per share, coming in way ahead of what they expected. And the reason they attributed that to is because they had better than expected performance on operational cost, efficiency, and their margins. And the reason why they did that is because the Diamond program has been going better than ever. The Dashers are out here accepting more orders at lower price points, at lower base pay than ever before. The Dashers have pretty much said, we're not negotiating with DoorDash anymore. We will do your bidding at whatever price you tell us to do it at that makes your shareholders as much money. So my question to you, Dashers, when are you going to stand up for yourself? When are we going to take our clown noses off, as some people out there like to say, and say, listen, we're not worrying about acceptance rate anymore. We're not worrying about diamonds anymore. We're worrying about one thing. Does this order make sense to my bottom line? And that is the only thing that matters. And if it does, accept it. If it doesn't, send it back to DoorDash. Let it get repriced. And maybe you'll see it again at a better rate that makes more sense. Or maybe another Dasher out there will see it again. Or maybe it'll get declined 9 times or 10 times or 12 times and eventually make it to somebody's screen where it makes financial sense. If we don't get smarter, if we don't start doing this, we're going to continue to work harder and we're going to continue to run ourselves right out of business and transfer the value of our assets, of our wealth, of everything. It's going to go right to DoorDash and its shareholders and any of the other gig apps that are following suit, that are seeing the money that's being made, seeing the performance that's happening. It's our job as businesses, as business owners, to put our interest above all else, just like DoorDash is doing. I'm not faulting DoorDash because DoorDash is doing what is natural to them. They're doing what they do. The question is, when will we start doing what we're supposed to do? I'll leave you with that, guys. Hopefully this message comes through clear. Some of you may not like it. A lot of you aren't going to like this. And perhaps I'll lose a few subscribers. I don't know. Sometimes when I put these videos out, I do. But it's the truth. I have data to back it up. Anyone that wants to see the data, reach out to me, dad-13@gmail.com. I'll reach out to you. We can connect up, and I'll show you the data for yourself. Go on DoorDash's website. Read their investor page. Read the information for yourself. Register for yourself to listen to the call. Hear it for yourself. Educate yourself. And through more information and better information, we can get better. And we can do better. And we can end up making money and making more money for ourselves. And making sure that we're protecting ourselves and our own bottom lines. Guys, as always, thank you for watching. Hit that subscribe button. Hit that like button. Stay safe, stay profitable, and Dad Dash will talk to you soon.